one thing, like what Ashley was saying with rate buy downs. So we always think of, especially in this rate environment, using the lender credit to buy down your rate, using a seller credit to buy down your rate. But what I just did, we're closing today, is a client, instead of using my lender credit to buy down their interest rate, they are putting it towards closing costs. So similar to what Otis was talking about, all lenders can do this. It's just in our current rate environment, clients have opted to use it to lower your interest rate because of payment comfortability, because these rates have been ugly. But my client, she was like, you know what? I'm okay with taking a higher rate because I know I'm going to refinance and I want to come less money out of pocket. So I ended up getting her, it was about almost $7,000, and she used it towards her closing costs. So that 2.5% approximately of closing cost, she used it towards that. So really understand that you can be creative with these credits. It really just depends on the client's situation. Are they payment sensitive? Some clients, they can't see beyond looking at refinancing. And I totally get it. They're scared. They're first-time home buyers. So to them, it's like, that's my payment. It's going to be for 30 years. Well, it's for 30 years until you refinance though. So how many people really end up keeping that original mortgage? Maybe our grandparents did because, they were scared to refinance. So just really having that conversation and having them looking at the numbers, because now maybe if you're in a market that you cannot get a seller credit and okay, shoot, these clients, like, they don't have enough money. We're competing with multiple offers. We cannot get a seller credit. All right, well, lender, what can we do with your lender credit to use it towards closing costs? We're going to be higher on payment. And if your ratios have room to go higher in your ratios with a higher rate, let's do that so that you get the home knowing that I can't promise you that you're going to refinance within 6 months. Now, I just did a refinance with clients that purchased in Oakland 6 months ago, and I was able to refinance them, but we don't know what that market's going to be in 6 months. So I tell everyone, look at it from a standpoint, maybe in the next 12 months. Can you handle this payment for the next 12 months? Hopefully sooner I can refinance you, or maybe I can't refinance you for another year and a half, but it's temporary, really. It's not going to be for 30 years. So just going over that, explaining it to them, and really explaining it in a way too that they understand, explaining things. I try to remind myself to speak slowly when I'm talking to clients, and as if I was explaining to my kids how this payment's going to work, how a refinance is going to work. Because we know clients are always super stressed and they're anxious and they're like, oh my God. So they're only probably hearing maybe about 40 to 50% of what you're really saying.